Buenos dias and welcome to Mortgage Cafe Northwest. My name is Adrian, and guys, I have some huge news for you. Today is Thursday the 21st, the day after the inauguration of our new president, Joe Biden, Vice President Kamala Harris. And already we are seeing some changes in the mortgage industry. This is great, especialmente para la comunidad latina, especially for DACA recipients. So FHA is back, guys. FHA is back available for DACA recipients. And this is good news. Let me give you a little bit of background here. So under the past administration in 2018, they decided that that DACA recipients no longer have access to FHA. And FHA was designed for first-time homebuyers. And like many first-time homebuyers, many young people getting started, maybe we don't have the best credit. Maybe we don't have a lot of credit established. We're just getting started. And so we need a low down payment program that has some flexibility with those lower credit scores. And that's what FHA does for you as a first-time homebuyer. So when they decided that that's not available for DACA recipients, that left us with only conventional loan as an option, which isn't a bad option. However, everything, like most things in life, everything has its pros and cons. And conventional can be a great program for those that have credit and great scores established. But again, for those of us that may have made some mistakes with our credit and have lower credit scores, FHA is an invaluable tool. So I want to show you some numbers. And if you're watching this on Instagram or Facebook, head over to our YouTube channel, because I'm going to be posting a lot more informational videos starting 2021 and moving forward. But let me show you guys some numbers on the difference between conventional and FHA. And again, I just want to tell you that every program has its benefits and some cons, right? But having access to all of them is great, is having options available. So these numbers that I'm going to show you are an example on today's interest rates. I don't have a particular person I'm using. I'm just using 30-year fixed, 450 purchase price, and numbers as an example to show you the difference. All right, so let me get into what I'm talking about. All right, guys, so here we have DACA recipient, and this is a 30-year fixed loan. And I'm talking about 3.5% down on a purchase price of $450,000. Okay, and $450,000 minus 3.5% down payment is $15,750. That's the down payment. And the first column that we have here, I have a DACA recipient with a 740 credit score. All right, great job. Build credit and has great scores of 740 plus. Okay, so now you're looking at a purchase price of 450. The interest rate based on today's rates for this person would be 2.875. Okay, and that loan amount is 434,250. That principal and interest is 1802. Mortgage insurance. Now, mortgage insurance is paid anytime you put less than 20% down. You're going to pay mortgage insurance in some factor or another, and that's another video for another time. But mortgage insurance is $253. That's basically the bank saying, hey, look, we're going to let you buy a house with 3.5% down, less than 20%, but we're going to put insurance on this thing just in case. In case you can't make the payments, they're covered, right? They're insured. So mortgage insurance in this example is $253. Now I'm using property taxes of $350 a month. Every property has different amount of property taxes. Every county is a little bit different. So I'm just using $350 a month as an example across the board to give us some numbers. Same thing with homeowners insurance, okay? Homeowners insurance is based on who you use for your homeowners insurance, your insurance company and your history. So I'm using a standard $65 a month. It could be more, it could be less. I'm just using some law of averages here to get us an example of what we're looking at. So again, conventional with a 740 credit score, 2.875. If we look at this payment, that's $2,470, $2,470. That's great. If you have those scores, that is great. That's exactly where you want to be. If you don't have those scores, and let's say you have a 640 score because you're just starting out building your credit, or because maybe you made a mistake somewhere along the line. Maybe you made a late payment a couple years ago on a student loan, or you took out a credit card at the college, you used it once, forgot you had it, and now you had a late payment, and or a cell phone company sent you to collections because of this $50 that you didn't pay them for leaving the contract early. I don't know, but you have a 640 credit score. Well, what that does to you is that puts you at 3.375 interest rate. So the interest rate is higher. And the mortgage insurance, if we look at the mortgage insurance, it's $604 a month now. So it puts that total payment of $2,939 in this example, using the same taxes, the same insurance, using conventional with the 640 credit score. All right, now, what happens if we go over to FHA? Now we have FHA available again at that 640 credit score. Remember, that's what this program was designed for. Now you have a 2.75 interest rate on a 30-year fixed. Now, the one thing you should know, again, I'm going to back up a little bit here because everything, as I mentioned early on, has pros and cons. And so FHA, they have what they call an upfront funding fee. The government saying, hey, listen, we're going to let you buy a house with 3.5% down with lower credit scores, but we are also going to put an upfront funding fee that gets added into the loan amount. It's another mortgage insurance as an example, and that gets added into the loan amount. So you put your $15,750 down, but they're going to add $7,599, 1.75 to that loan amount. Okay, so that payment is $1,953. But look at this, the mortgage insurance, guys, is half compared to the conventional with the 640 credit scores. You look at these side by side, it's half. Okay, so the rate's lower, the mortgage insurance is half, the property taxes are the same, homeowners insurance is the same, and that payment is $2,675 a month total. So that's the difference. You can see here why FHA is so valuable to first-time home buyers, and having access to that again under the new administration is crucial. It's big news. Now, if you have great scores, you've done all the right things and build positive credit scores, then you may not need FHA. We're gonna steer you a little bit more towards conventional, because conventional may make more sense in the first column. But again, having options is what's important, and we have those options. So that is the great news for today. FHA is back for DACA recipients. And if you want to know what that means, give us a call, reach out. We are a local mortgage broker, Latino owned, here in Tigard, Oregon. And we are licensed in Oregon and Washington. If you are in another state, give us a call anyway. I will connect you with a independent mortgage broker. We're not a bank. We're not a big corporation. We are an independent mortgage broker. And what that means is that instead of working with just one bank or one corporation, we work for ourselves, and we have up to 15 different lenders that we work with. So we basically take your application, your information, and we figure out which of our lenders is going to give you the best program and the lowest interest rate possible. And the other thing is, all of our lenders are set up with the same commission. So it doesn't matter where we send your loan. Guys, give us a call. We'd love to help you out and look forward to hearing from you. And this is a good day. Talk to you soon. Have a great one.